The following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
It's Friday, and we're going to be talking about money. So where is this Santa Claus rally? I mean, the market's up a couple days, and it's down a few days. Normally at this time of year, you get what's called the Santa Claus rally, and we see the market surge upward into the end of the year. I've heard people say that it really doesn't begin until next week, until the week before Christmas, but we'll see if what we get into. But that's a short-term thing anyway. We're looking for a long-term. I invest for the long term. I believe that that's where you make money. But today we're going to talk about 2016. Not going to get it all covered today. It's going to take us next week and maybe the week after that to finish talking about the predictions for 2016. Some of these predictions are out on a limb. Some are very different from what you'll probably hear elsewhere. I mean, Barron's, I think, was the first magazine out this year with the 10 best stocks to own. And then the following week, the 10 best small cap stocks to own. Very often you have mutual funds to own, mutual funds to sell, stocks to buy, materials to buy, whatever. I believe that's all short term, and I believe that's really wrong. I don't think that there's anything magical about changing a portfolio on the first day of a new year, selling off the old stuff, buying new stuff. I don't believe that rebalancing at one time a year makes a lot of sense either. I believe it's an ongoing process that has to continue through the year. But not even beyond that. It goes beyond continuing through a year. It's a long-term strategy and a long-term holding that you have to look at. And so as I get ready to talk about predictions, I want to remind you about something I've been talking about for 5 years. It'll soon be 6 years that I started talking about this report that was done by Standard Chartered Bank of the UK. It was a report that got a lot of people heeding this report, thinking about this report, believing in this report. A lot of things came out of this report. A lot of ancillary reports came out of this. Now it's kind of dropped away, and I'll talk about why that is. But it talked about a long period of time when you had the GDP that grew at a much greater than average rate, the world GDP, how the world was growing. It's significant in terms of what's happening. And the long periods of time, the first period of time was from 1870 to 1930. It was driven by the industrialization of the United States. There were a lot of things going on, and there were winners and there were losers out of that whole period of time. If you think about the United States going into that period was a completely agricultural nation. Coming out of it, we were industrializing. We went through some very, very tough times during that period of time, and it ended as we formed at the same time, we formed the Federal Reserve. That was something that was significantly indifferent. The second cycle, from 1945 to 1970, was a time rebuilding Europe after World War II. It was the European nations were getting rid of their colonies, or their colonies were becoming independent, is probably a better way to say that. It was a time when East Asia was starting to grow. And the third cycle, they said, began in 2009. As people were looking at this, we were coming out of the Great Recession. A lot of people were saying, you know, this is really right. We look at this. We look at the stats. We look at what's happening because we're in a period of time when we'll see world GDP grow at a much faster rate than average. And if you look, by 2030, 93% of the world's middle class will live in emerging nations. And it is the emerging nations which will drive the world economy. That is the conclusion of this study. And a lot of people looked at this. And you remember, Some of the things that have grown out of this study are some things that happened even prior to the study. People focusing on emerging nations. But something happened this year. $500 billion was withdrawn from mutual funds from emerging nation funds. So what's going on? Emerging nation stock markets are getting creamed these days. And it's not just emerging nations. When you look around and look at what's getting creamed this year, it is not just emerging nations. Junk bonds are getting creamed, and we'll talk a little later in the program about one that closed, that failed, completely failed. And it's commodities. Commodities have dropped off a cliff this year. Some of those commodities dropped at the end of last year. Oil dropped, gold had been dropping, but this year, commodities way down. It's REITs that have taken a hit. It's private equity that's taken a hit. Hedge funds have taken a hit. Gold and oil. What's going on? All these things. I've talked about this before. These are the things that look like one headache after another headache, and you get people, as you listen to the stories on TV and read the journals, you have people predicting that things are going to recover in the next year, over 2016 or into 2017. That's not my prediction. I believe it's going to take a longer time. I'm going to talk about that as we go through here. I believe that emerging nations are just one of those aspects. Those are symptoms of what's happened. And it's a healing process that's happening. I believe that during the 1990s and into the early 2000s, there was a lot of credit available. There was a lot of speculation going on in commodities and other assets. With all that credit available, people began to believe that the speculation on those future contracts were real. They began to believe that people that had signed up to take delivery of oil a year or 2 or 3 years from now, or people that had signed up to take aluminum or steel or cocoa or whatever it might be, they began to believe that that was real, and there was the intention of taking delivery of those products. Turned out, we saw oil rise to $157 a barrel, and then things came crashing down because at one point there were 10 ships floating out at sea full of oil, and no one wanted to take delivery. Buying and selling futures contracts became a very big business. And a lot of the emerging nations depend upon their commodities for their GDP growth. But there were plants built, aluminum plants, steel mills. China increased their steel production 4-fold from 2000 to 2015. And now they're underselling steel for less than it costs them to make it because there's a surplus, a 600 million metric ton surplus of capacity that's over and above what demand is. So we have the private equity markets which are struggling. Does that mean that this whole Standard Chartered study is wrong? No more than it meant when the market came crashing down in 1987. We had Black Monday. 1987, the stock market came crashing down in the U.S. There were people that said that things were going terrible. In fact, I remember I had just started in the business in 1986. Wholesaler for a mutual fund came into the office to talk to us about what was going on in the stock market. The market had crashed on Monday. We were now Tuesday or Wednesday, a day or two later. And this wholesaler said, $1 trillion is gone from the economy. You're going to be able to walk into Nordstrom and hear a pin drop. There's going to be no one there. So much wealth has been lost in the economy. No one's going to be in Nordstrom. I went home. I told my wife, we have to go to Nordstrom this weekend. This is the story, what I heard. You'll hear a pin drop. We went to Nordstrom. We couldn't get into the store. There were so many people cramming the aisles. It was packed. Completely packed. I said to my wife, somebody must not have told these people they lost $1 trillion. That's the kind of thing that people look at. You get so involved in the present that you forget about the long term. So as we talk about 2016, there's impact that's happened this year. And some of it has been positive. Some of it, we've seen a correction going on. A correction very much and very similar to what we saw with housing. Housing crashed. You know, we went from building almost 1.5 million homes a year, a traditional number, to building 500,000 homes during that period of time. We saw prices sink almost 40%, and they still haven't recovered to that point they were in the mid-2006 time period. Home prices came down. It looked like home prices had come down in 2008 to a low point, 2009, but they continued to stay down for a few more years. I believe that's where we are with commodities. We've seen them come down. It's going to take time for them to recover. Whereas the housing market is a market that grows at 1.5% a year, 1.8% a year. The commodities market grows at almost twice that. We'll see that recovery. Now, don't go away, because we've got a commercial coming up. You're listening to Mike Adams talking about money. I am going to get to 2016 and my predictions for 2016. So don't go away. And I have a great guest. You'll want to hear what he has to say. We'll be right back after the break.
More about money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your 7-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
We're back with more about money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So if you've just been listening to the news in between this show that came on with just following the commercial, you heard him talk about analysts saying that oil prices are dropping down and that's going to hurt the airlines and airline sales. I'm confused by that. How can it cause a bigger problem when you buy your fuel cheaper? Are they saying that it helps to have higher priced oil? You'll sell more airplanes? I don't think so. I think prices go down. It allows more people to fly. And talking about the Fed, one thing we have to talk about is the Fed raising interest rates. You know, the market, I think it was a knee-jerk reaction in the wrong way when we talk about the Fed raising rates and people being afraid of what's going to happen. Normally, it's true. When the Fed begins to raise interest rates, it's a negative for the market. Normally, that's true. But normally, when the Fed is raising interest rates, why are they raising interest rates? They're raising interest rates to slow down the economy. They're raising interest rates to slow down inflation. We don't exist at a time of inflation right now. They're raising rates to get to a normalized interest rate scenario. They're getting back to normal. We're not trying to slow down inflation. We're not trying to slow down the economy. They're raising rates to get it back to a normal level. They did this in 1994. They did it in 2001. Both of those years, the stock market bounced around, but 12 months later, both of those years, the market was higher. What was going on in 1994? It was not inflation. It was not excessive asset frizz, whatever. It was a time of bringing out the market. It was a time of bringing interest rates into a normal level. Same thing in 2001. Remember, that was following the dot-com crash. It wasn't a matter of slowing down the economy. We'd already had the stock market crashing down. And what happened after that? The market was up after they raised rates. I believe it's going to happen again. That the significance of the Fed raising rates is not going to have a significant impact on the stock market. Where it will have an impact is on the dollar, because as the interest rate rises, it'll make a small difference for people buying the U.S. Treasuries and seeing the economy, the dollar, as being stronger. They'll begin to see, and the perception will be that the economy is strong. It is strong. And that drives currency. We're going to see a stronger dollar. My prediction is that we'll see the dollar trade to a premium to the euro. And that's not putting a dollar sign on it or a number on it. I believe we'll see the dollar trading at 1.05. That's going to be a negative in some ways for those emerging markets where we began to talk, because that means that for them buying products, importing products from the United States, it's going to be more expensive. But on the other hand, it's going to mitigate some of the drop in prices of commodities, because commodities are priced in dollars. And so the commodities that they're selling at $100, if the dollar increases, it means that currency change is going to be positive for the emerging markets. If you look at the home prices and what happened with home prices, it took a number of years to work out. I believe it's going to take a number of years for it to work on commodities as well. Forgot my place. There we go. As I talk about my forecast for 2016, I want to bring one thing to the front. When I'm talking about a forecast, it's talking about a percentage and probability. And what I'm forecasting today for 2016, that's going to change. I use the analogy very often of a poker hand, of playing Texas Hold'em, for example. A lot of people know about Texas Hold'em. The game is played where you deal 2 cards to each of the players. Say there's 6 players. So you deal 2 cards face down to each of those 6 players. Then those players look at their cards, decide whether they want to stay and play the hand or whether they want to throw the hand in. Those people that decide to stay in will place a bet. And when everybody has bet and the betting is finished, then 3 cards are dealt face up, and everyone gets to use those same 3 cards. So they now have the 2 hands in their hand and the 3 cards that are showing face up on the table. Now, if you have a pair of aces, you have almost a 50% chance of winning if you're playing against 6 players. So that's a good hand. If you have a 10 of spades and a 6 of clubs, that's not a very good hand, and your chances of winning are a little less than 1 in 8. So most people would throw those hands in. And I've held that kind of a hand once. I threw it in. But if the flop comes, those 3 cards in the center of the table are 2 10s and a 6, that suddenly increases the value and changes the probability. It changes the probability of someone holding 2 aces. So each time you turn up another card, when the next card comes up and is one more card coming up and then one more card coming up, so that there's a total of 5 cards that are up and 2 cards in your hand. But each time, that changes the probability of you winning that hand. It's the same way as we go through 2016 and into 17 and 18. As we develop more information, the probabilities will change. So it's an ongoing process that has to be. It's like trying to forecast the weather a year from now. What is the weather going to be like on the 1st of January 2017? You can look at the average and say that you have a pretty good shot at it coming out at that temperature. But it won't come out exactly at that temperature. There's going to be fluctuation, and so it is as I make the predictions. Those things are going to change. It's going to change the value as you go forward. And that's why this whole process of looking at it at the beginning of a year is nice to do. It's good to do, to think about how you structure portfolios to take advantage of where you're going for the year and the next year and the next year. But it is also something that needs to be adjusted as the year goes along. So with that, I will come back to talking about forecasting. But first, I want to break and talk about my guest. My guest today is Chris Nelson. Welcome to the program, Chris.
Well, thanks very much.
I'm not here. I'm not hearing. So, can you hold on? I'm not hearing. Okay. Nothing. Okay. So we're going to do this without the headset then. So, welcome to the program, Chris. Let's try this again.
Thank you very much.
So why don't we talk about your company? Well, let's begin with your background.
Okay, so my background has really sort of been a process of coming full circle. I began my career in nonprofits. I was part of the VISTA program, which is Volunteers in Service to America. And that's really the domestic equivalent of the Peace Corps. Started way back in the 60s. I was involved in the 90s, working with a food bank in Philadelphia. Around that time, internet was getting started. You might remember 1995.
Right.
Amazon was starting. Netscape was making its first appearance. And I began writing about music, which was another passion of mine, popular music, the music industry. And I did that for a number of years, dozen years. Wrote for internet magazines, wrote for the New York Times, Seattle Times. And then after a while, I sort of started getting the itch to get back to working with an organization that felt like it was contributing to the community. And I found my way to Pyramid Communications, which is where I work now. And Pyramid is a strategy and creative firm here in Seattle. We also have an office in Portland that works exclusively with nonprofits.
So let's talk about that. So is it just one area of nonprofits, or do you have several?
We have several. Our tagline is giving voice to good causes, and we sort of group those into 5 areas. I lead the arts and culture group. We also work in conservation. We work in health and well-being. We work in education and Indian country. And of course, there are some clients that we work with. We believe in their mission. They may not fall neatly into one of those categories specifically, but by and large, that's sort of how we think about the work that we do.
So let's talk about each one of those groups. Let's start with the one that you're most familiar with.
So arts and culture.
Arts and culture.
That's what I head. And we do a lot of work here in Seattle. We do a lot of work regionally, doing more nationally. Sort of the philosophy that guides us is that a community obviously has some basic needs that it has to get taken care of. People need jobs, people need housing, people need to eat, education. But for a community to really thrive, for people to get the most of what they can out of life, one of the other components has to be a robust arts and culture ecosystem.
That's for sure.
So in that work, we might work with EMP Museum, for example, or with Seattle Theater Group or Cornish College of the Arts. And my work with them oftentimes has to do with helping them tell their story in a compelling way, making sure that the people at those organizations know how to articulate the mission behind what they're doing.
And that's really a critical thing that they need to do. And very often it's a misunderstood thing within the community. So,
yeah, you might find, for a while, I think EMP Museum is a good example. For a while, some people saw that they were involved in a number of things, music, science fiction. We helped them articulate sort of the through line that connects it all and their belief in popular culture, but what popular culture, understanding it, brings to our understanding of our times.
Hang on. We're going to be right back after this commercial break. You want to hear more of what Chris has to say.
Stay tuned. About Money returns in a moment with Mike Adams here on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I'm here talking with Chris Nelson from Pyramid, and I want to talk about some of the organizations that you've worked with. You know, I was on the board of Seattle Theater Group, chairman of the board. So let's talk a little bit about some of the work that you were doing there and are doing there.
So Seattle Theater Group is one of those organizations that, before we were talking about making sure that we help our clients really be able to articulate the reason behind the work that they do. And STG is interesting because not a lot of people know that they are a nonprofit. People know that they might go to the Paramount Theater to see Wicked or Book of Mormon or some big show like that, and they assume that STG is another show producer. Well, they are a show producer, but they are a nonprofit show producer, and that means that they have different missions that they're working toward. So not only turning a profit, although it's nice it's nice to stick around. With STG, we helped them put together an annual report that really articulated their mission, that they are working to bring world-class culture here to Seattle. You know, they'll take a chance on some shows that other organizations might not think to bring here because they don't know if it will, how well it will be received.
And they will bring shows here they know that they're going to lose money on because we know that we're going to make money on certain shows.
On other things.
We balance.
Right. And STG also has this mission of making sure that people throughout the community have access to art. So, for instance, Ailey Camp is going to be starting this summer. So working with the Alvin Ailey organization out of New York to provide dance experiences for kids in Seattle. And then this third part of their mission is historic preservation, making sure that the buildings like the Paramount or the Moore Theater, the Neptune Theater are here for decades to come, that we don't lose these historic theaters that mean a lot. And, you can tell folks about these things. You can say, put this information on the STG website. People might not have a reason to just go click over and read that. When people go to the STG site, they're there to buy tickets. They're there to look at the calendar for what's coming up at the Paramount. So we worked with the folks over there. Vivian Phillips is a fantastic person at STG. We worked with Vivian and we said, well, what about this? What if when you bought your ticket to Book of Mormon, say, you got a confirmation box that comes up online and says, here's your ticket number, here's your confirmation, this is when the show is. Underneath that, it said, did you know you just bought more than a ticket? Your ticket purchase at STG helps fund world-class culture throughout Seattle, or something like that. Really helping people to understand the work they do.
Mm-hmm. And that's important.
Yeah,
that's truly important.
That's very important. And these are the organizations that really make our changing city, make sure that it is a thriving city. There's a lot happening in Seattle now. There's a lot happening in South Lake Union, for instance. So we might work with Cornish College of the Arts to talk about who they are as an organization today. And it's very different from who they were 100 years ago when Nellie Cornish founded them. There are some things that are the same. Nellie Cornish founded the college with an idea that people should work across disciplines. And that's actually a very modern concept now. It's a very timely concept now. But helping people understand that Cornish really prepares students to adapt and evolve. So, for instance, Cornish dance students they perform on some of the most important stages in the world, and they're doing amazing, incredible work in many different dance forms. But they also work with tech companies in South Lake Union. They may also work with a medical organization that needs to do some motion capture work for some medical modeling that they're doing. So helping people understand that Cornish is not sort of a traditional conservatory school, but a school that's really very forward thinking, helping artists sort of transform ideas into meaningful work and relevant action in our community.
It's a great message to get out. But you also do some cross-discipline work as well.
Yeah, you'll find that that some of our clients cross over different subject areas. So, for instance, we might work with the Lummi tribe up near Bellingham, and they right now are concerned about a coal terminal that is being proposed for Cherry Point. And they're concerned that that's going to potentially violate treaty rights and destroy some traditional fishing grounds. In some senses, that would be a conservation project for us. It touch on our conservation work. In other senses, it has to do with indigenous rights and our work in Indian countries. So you'll see crossover here and there.
And so you're delivering that message.
Yeah, we're helping them get that work out there. You know, we do a variety of things in addition to messaging. We work with organizations on brand and interactive and design, planning, strategy. So you might find us involved in a community engagement campaign. So something like that might be KEXP, which is another radio station here in town, recently outgrew its studio space. They were looking for new studio space. So we helped them work with their listeners and musicians in the community to make the case that maybe they could find a new home on the campus at Seattle Center. So getting the community involved and helping the community really speak out for things that they think are important.
So it sounds like you do a really good job in talking about the arts, the culture, being involved across a broad spectrum of things. So what kind of, we've talked about a couple, Cornish and Seattle Theater Group, about those kind of organizations. Do you work with some of the small organizations as well?
Yeah, we'll work, say, for instance, with Neighbor Care Health is a interesting organization that helps provide health services for vulnerable populations in the city. That's not work that I personally do a lot of work on. That's our health and well-being team. But we'll work with organizations like that, or smaller schools in our education practice. And then sometimes we'll work with bigger organizations that have a broad reach through smaller organizations. So, for instance, we work with the Seattle Foundation. We helped them develop the Give Big campaign, which is a 24-hour day of giving. It happens in May each year, where most recently, I think $14 million was raised during that 24-hour period, and that went to more than 1,200 nonprofits in our area. So the Seattle Foundation is a big organization that's touching thousands of smaller organizations in the region.
It's a fantastic thing that you're doing. So if someone wanted to get a hold of you, if a nonprofit wanted to touch base and see if their message is something that you could work on, how would they do that?
They would visit our website, which is www.pyramidcommunications.com.
And what sort of information would you need from them?
Well, we'd love to know sort of, I'm sure as you like to talk with people too, what are your goals? What do you want to achieve when we collaborate together? Who are you looking, whose opinion are you looking to affect? Who do you need to help you in your cause? So we'll be looking at things like what you want to achieve, who you're going to enlist to help you achieve that. And we'll look at things sort of where your organization is at that moment. Some organizations come to us and they have messages that resonate really well already in place. Some organizations are not as far along, or maybe they're striking out on a new campaign, and they need our help to develop what those messages might be. So we'll want to talk to them also sort of about how well do you know yourself as an organization? How well do you already articulate your mission and your vision for change in the world, that sort of thing.
Well, that's great. Thank you, Chris. It's a tremendous service you do.
Well, thank you for having me.
So I want to shift back and talk about one of the incidents that happened this last week, and that was the shutdown of the junk bond fund. Third Avenue Focused Credit Fund failed. It failed. They closed it so that they could continue to liquidate. What happened? Junk bonds, junk bonds is a descriptive term that came out of the 1980s with many of the bonds failing. But over and above that, high yield bonds was the proper name, but they are and can be junk bonds. Third Avenue is a firm that's been around a long time, and they were a deep value type firm. They looked for distressed firms, whether it be in stocks, whether it be in bonds. They have a very, very good track record. But here they are. They started a mutual fund that failed. It's not very often that you find mutual funds that really fail. This one failed. It's all that thing that came out of this period of excess credit and the credit bubble bursting in the mid-2000s. This is part of it. It was the commodities. It was gold. It was oil. It's private equity. It's junk bond funds and the emerging markets. They're the first one to fail, but I'm not sure that we won't see another one as well. They were a very good firm. That's what was surprising and has been surprising to everyone because they were experts in this field. But they got caught by their own expertise, thinking that this was something that was going to be a very short-term situation. Instead, it is a long-term situation, and it's going to continue to be long. We're coming up to a commercial break. I want to talk about wages. I want to talk about inflation. And are only the rich going to benefit? We'll be talking about those things. Don't go away. We've got those to come. I'll be back after the break.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
Before I get started, I'm going to talk about wages and what's going on in that area, talk about inflation. But there's not a company that doesn't deal with a lot of data these days. Huge amounts of data. And if you're not getting the most out of your data, if you're not sure if you're getting the most out of your data, you might want to contact BrainBox. If you mentioned that you heard about it on this program about money or mention Adams Financial Concepts, they will set you up with a 1-hour consultation time with their founder and CEO, Adam Nathan, to see if they might be able to show you how you can benefit from their services, how that might make you money. You can log on to www.teambrainbox.com. They were a guest on the program. They're not paying for the publicity. It just seemed to me like it's a good idea. And so it makes sense if you're dealing with a significant amount of data. But let me shift now and talk about what's going on. There's been this whole thing talked about by politicians, talked about in the newspapers, talked about on TV, that the rich are getting richer and the middle class is stuck with their wages. They're not going anywhere. It's just flat. You know, when the employment rate was 10%, there were a lot of people looking for a job. You could go out and hire people at lower rates than they'd been getting before. That's typical of a recession. Even when the unemployment rate is 6 or 7%, you find people are looking for jobs. You find that actual wage rates during most recessions tend to go down because there's an excess of labor. But what happens when the labor rate decreases to 5% or even under 5%? Is that you find wages beginning to increase. And we started to see that in November, where wage increases on an annual base increased over 2%. That's significant. And I believe that we're going to see an increase in wage rates this coming year with unemployment dropping below 5%. I believe that we're going to see 4.6% in terms of unemployment. And we're going to see the wage rates rise at 3.1%. That's my prediction. 3.1 for the labor rate. I believe that wages are going to rise. We're going to start to see more union pressure. We're going to start to see more strikes. We're going to see more pressure on increasing wages. And it's not just about the $15 wage rate. I think that's long overdue. I think Seattle is the first city to do that. And cities around the country are beginning to look at the $15 wage rate. I believe that having a minimum wage of under $10 has kept that rate low, and it's not a livable wage. If you're going to live in a city like Seattle or a metropolitan area like here, the wages need to be higher. And those are the same kind of employees that will spend most of their wages on the economy. And when the butcher pays the baker, pays the candlestick maker, it's a multiplier effect, 2 or 3 or 4 times over. That's the impact that has. And businesses are, I believe, seeing that. We'll see that more as the year goes along. You know, for all the talk from the politicians about how many jobs have been lost, the wage, it's not just about unemployment rates. It's really true. If you look at the number of jobs that were created in 2013, it was 2.3 million net creation of jobs. 2014 was a record at 3.2. This year will be 2.8 or thereabouts. That's a significant number of net jobs created. Yeah, we lost a lot of jobs in the Great Recession, but we're starting to see it up. And while the rich will continue to get richer, so will the middle class. I believe that the middle class will begin to benefit. And not only will wages increase this coming year, but we're also going to see what Richard Bernstein calls the Walmart world. The dollar is up. That means we can buy imports at a lower price. We're going to be able to buy things cheaper that come from overseas. Prices of raw materials are going to be lower, meaning that manufacturing companies and companies that buy things from overseas are going to buy cheaper. If you look at Intalco aluminum, that's where I started my career, up in Ferndale, Washington, with an excess capacity of 23% for the manufacturing of aluminum, for the smelting of aluminum. They are shutting down the pot lines, those reduction furnaces, keeping the cast house going and buying aluminum from overseas at a cheaper price than they can make it here. That's going to benefit their profitability. And in the long term, that gets passed along as well. You're going to see retail prices down. And when they look at retail sales, when you look at the impact that retail sales are having, retail sales are increasing, for example, in November, 0.2%. But when you take out the things that are decreasing, like gasoline is a significant part of the retail sales. Gasoline prices are down almost $1 a gallon from last year to this year. That should, in all reality, if everything else was the constant, should be negative on the retail sales. That means that gasoline, X things that are affected by gasoline, retail sales are up significantly in November. That's positive for companies. It's positive for the wage earners. And if you look at the impact that's going to have on inflation, as a rule of thumb, the rate of inflation is influenced by two things. It's influenced 1/3 by commodities and 2/3 by labor. There's been one of the things that the Fed has talked about is the missing inflation. The numbers are low. It's been less than 2%. It's been almost zero. But when you think about it, wages have been essentially stagnant for a number of years since the Great Recession, and commodity prices have been dropping. They dropped significantly. That has an impact on how they measure consumer price index. Commodities are down, wages are beginning to rise, and we're going to begin to see that, and that's going to have an impact on inflation. When commodities are down almost 30%, and that's 1/3 of the inflation number, it means even as wages increase, commodity prices are holding down inflation. This is I believe that we'll see inflation begin to slowly tick up as commodity prices are stabilized and as we see labor rates increase. It's a time of year when mutual funds or stocks, you get the recommendations to buy and to sell. I think it's the wrong time to think it's time to change everything now. I think it's time to keep in mind what's going on, to look at the year and to look at it going forward, because there's a lot of data being published, but to do an ongoing evaluation. Probabilities will change. Things will change. And it's a time to look outgoing so that you're prepared as things change in the economy. 2010 going into 2011 looked like a very, very good year. And then we had Fukushima, the tsunami that took down Fukushima. That changed things. We had the U.S. government that went through a shutdown. We had things that happened during that year that had a significant impact. That could happen in 2016. Without that, my prediction for the stock market, I'm going to tell you about that next week. So be sure and tune in, because I will predict where the Standard & Poor's is going to be next week. Stick with it. And until then, have a very good week. And Christmas Day, you'll get my gift of my prediction. Until then, have a great time.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Friday afternoon at 3 for more About Money with Mike Adams, here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
The following